The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to a very important Friday for geopolitical events. Welcome to Squawk. I'm Steve Sedgwick with Juliana Tattlebaum and Karen Cho. These are your headlines. All eyes on Anchorage, Alaska, as the city prepares to host today's meeting between Donald Trump and Russia's Vladimir Putin. But the US president says he's already eyeing a second summit to bring in Ukraine's leadership.
We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
A much hotter than expected PPI print stateside pours cold water on outside hopes of a jumbo Fed cut in September, sending yields higher. But markets in Europe remain on track for healthy returns this week.
And Chinese growth data slumps across the board, with retail sales, industrial output and fixed asset investment all undershooting expectations as the threat of tariffs continues to loom over the world's second largest economy.
The world's eyes are on Alaska, where the US President Donald Trump is set to meet his Russian counterpart Vladimir Putin in just a few hours' time. Trump has looked to temper expectations for the outcome of the summit, but expressed his optimism surrounding the possibility of a deal, also warning of severe consequences for Moscow if peace is not agreed. It has been a week of hasty diplomacy for Ukraine and its allies here in Europe, who met virtually with Trump on Wednesday, outlining their conditions to the president ahead of his meeting with Putin. So what do we know ahead of the meeting? Well, the summit will take place on a US military base in Anchorage, Alaska, kicking off at 11 a.m. local time. The leaders are expected to have a one-to-one meeting, as well as a bilateral lunch, including delegations from both nations. Trump and Putin are also set to give a joint press conference after the meeting. However, the US president yesterday cast doubt on this. Despite calls from Kyiv and its European allies for Ukraine to have a seat at any negotiating table, Vladimir Zelensky is not expected to attend the meeting. However, the US president yesterday floated a scenario in which his stay in Alaska could be extended to include a new meeting with the Ukrainian president. Speaking yesterday, the US leader suggested a more important gathering than today's summit is still to come.
We have a meeting with President Putin tomorrow. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. I don't know that it's going to be very important. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
So let me just take a step back. The Russians have been trying to gain control of Donbass, Luhansk. Forget about Kharkiv and Kherson for the moment. For those two eastern regions since 2014. I was actually in Kyiv at the moment when they were invading Crimea back in 2014. So this isn't about a 3-year war. This is about a 10-year objective so far and a much longer term objective from the Russian president to subjugate and control the entire nation of Ukraine, which he believes it was a mistake historically, a grave mistake historically, for the Russians to have given independence to as well, or for the Soviet Union as it was to have given independence to as well. His aims so far are the following: to defang Ukraine, at least, even if they can't control the whole country as well, to not allow it to have a significant military that can defend itself, to not allow it to have NATO membership, and to keep it out of the sphere of Western influence. For the Ukrainian part, their aims have been, of course, to expel the Russians from every one of those regions, including Crimea, and get the whole of their sovereign territory back as well. That is clearly not possible given the status quo as well. So the Ukrainian aims have changed. They actually, whether they say it overtly or not, would probably accept some form of détente, if not longer-term treaty, based on the current lines of demarcation of where the Russians have control and the Ukrainians. The Russians, though, haven't moved one iota yet on meeting somewhere in the middle.
You spelled out the politics around Ukraine very nicely and what negotiations could contain. But I think the reality is that the Americans and the Russians may use this to discuss more than Ukraine. And already other topics have been floated as well. A nuclear arms race, the new START treaty, negotiations around that and control of nuclear weapons. Also hacking of US federal court databases. We've heard Arctic early in the week where there could be commercial negotiations. It feels like there'd be a whole steady stream of topics that cross debate between the two leaders today. For me, the market implications are also stunning. We've seen obviously a race into defense names. It's been one of the big trades so far for 2025. Is there any short-term breather if there are glimmers of hope here about any ceasefire or ending of the war in Ukraine? That is one trade to look at very closely. And typically on a day like this, in any other given scenario, we would be talking about the dollar and gold implications. But dollar has been wrapped up in so many other stories and the descent we've seen here. Would there be any dollar implication, which I think is fascinating anyway to debate? And of course, gold sideways since April. You'd think a big major geopolitical event like this would track on the back of gold, yet it doesn't feel as though we'd get to a resolution point where gold would see a big move. And there are other, again, stories at play here on central bank buying. So I think from that context, it is fascinating.
I think it's hard to gauge what markets are pricing in with regards to this meeting, and maybe it's because it's hard to know what could come of it. Steve, you raised the point that Russia hasn't moved an iota in terms of what it wants to achieve here. And I asked Carsten Nickel, who was in the studio earlier today, he was on Europe Early Edition talking about what President Putin wants to get out of this meeting. And I said, is there any way that we see a ceasefire without agreement to give Russia some of Ukraine's territory? And he said, well, what Putin wants, we talk so much about buttering up President Trump and leaders around the world doing that. And it's actually much the same with President Putin, he said, that it can go a long way to give President Putin a seat at the table with the U.S. president. And when it comes to future seats at the global table, that could go a long way in terms of buttering up Putin and potentially softening him towards a ceasefire, that using sort of soft techniques like that could actually go a long way in terms of getting Putin to agree here.
Yeah, and I think you're both making actually the same point, that there are other things at play here that could come into the mix. I was actually at the last G8 meeting that Russia was involved in Moscow on home territory. I was at the last G20 meeting that Russia was involved in St. Petersburg. I was also at the G8 meeting in Loch Erne under President Obama and Putin. And I got questions into the pair of them when they were strolling down past me as well. So they were involved very heartily in the global system. They were coming more and more in as well. But then, of course, post-2014, they have had various degrees of being ostracized by the global community, and the Russian economy has suffered. Let us not forget that. The Russian economy is incredibly reliant on one thing, and that is hydrocarbons as well. And if that access that you're talking about as well, for American companies and Russians to have a look at maybe looking at getting involved in Ukrainian minerals, and the American companies getting involved in the Arctic region that Russia controls as well. Russia's the biggest country on the planet as well. They have enormous amount of hydrocarbons left that actually American companies would love to get hold of. So you're absolutely right. There are other things at play. But one more thing I want to say is the American president is also looking behind him as well. He's looking at what's going on in Washington as well. And there are Democrats, of course, but there are certainly Republicans as well who want the president to have a hard line with Ukraine, not only because they think it's important for world peace, but also they've got an eye on what China is doing in Taiwan, and they don't want to give the Chinese encouragement by having a weak deal with the Russians now, with the Americans in the West, actually, which would then encourage the Chinese to have a more of aggressive approach.
The optics matter, and just a quick line on the economy, because there are economic consequences. You mentioned the weakness in Russia, the Central and Eastern European context of any economic investment that has been almost put on hold because of what you're seeing in Ukraine. That could come back, so any bounce for Europe is seen as instrumental. We've seen other big nations, China, even China today, the economic weakness coming out of the mainland market. We're going to talk about that in a bit. Don't forget, any improvement in global sentiment around geopolitics could be positive for the world economy.
Well, let's take a look at markets. Speaking of the economic data, the raft of numbers we got from China overnight, here's how Asian markets are reacting. You've got green for the most part. Nikkei 225 over in Japan leading the charge, up about 1.6%. You've got also some gains for the Shanghai Composite, up about 84 basis points. The Hang Seng in Hong Kong is bucking the trend, though, down about 1%. Now, all of this as new data out of China shows the country's economy losing momentum in July, with retail sales, industrial output, and fixed asset investment figures all coming in below economists' expectations. Let's get out to our colleague Elaine Yu for more on this data. Elaine, to what extent is the softness that we're seeing down to domestic pressures within the Chinese economy versus external factors?
It's really both, and China's economy just delivered this sobering reality check, slowing more sharply than anticipated. And industrial production grew 5.7% year on year. That's the weakest pace since November. And retail sales grew 3.7%, the slowest this year, so showing that consumption is still weak. And the deepening housing slump, as shown in the latest data on housing prices, are only adding more pressure to that. And fixed asset investment decelerated to just 1.6% year to date. And that's the worst pace since the pandemic. So we've got both the industrial and the consumer track of China's economy showing strain. So it's both domestic and external factors being a double whammy for the economy, which is painting a very different picture from the first half of the year. And this industrial slowdown also confirms that temporary U.S.-China trade truce is now fading, and that front-loading effect is reversing. So economists have called this growth payback, and the government has also acknowledged that China's exports are facing pressure because of external uncertainties. But also in July, though, there were bouts of extreme weather, like floods and high temperatures, that disrupted consumer and construction activity. And the government also said that created a short-term hit to economic growth in July. But also data earlier this week showed that new loan growth contracted for the first time in 20 years. That means neither businesses or consumers want to borrow money right now. And that's a sign of waning confidence as well. So Capital Economics has called the latest data a worrying loss of momentum, and ING says additional stimulus is needed. So the question now is how forcefully policymakers will respond, and Beijing has signaled a wait-and-see approach, but the second half of the year is shaping up to be more challenging for sure. Back to you.
Elaine, thank you very much for that. Hard to see how the data helps out some of the big luxury names in Europe today. Very weak read in there across the board. And let's take a look at US producer prices, which grew at their fastest monthly pace in over 3 years in July at 0.9%, much higher than forecast. Xing out food, energy and trade services, the index was up 0.6%, the biggest gain since March 2022. Traders pared back their rate cut bets after the release, so a bit of a wild ride on those expectations. Futures markets are now showing no chance of a 50 basis point cut in September and an around 6% chance of a hold, according to LSEG data. St. Louis Fed President Alberto Musalem has told CNBC it is too early for him to decide whether he supports easing in September and that there could still be a longer-term inflationary impact from the president's tariff policies.
Companies told us that it would take about 3 to 6 months to pass on costs once they felt the costs. We're right around that 3-month mark. July data is 3 months after April. I expect the impact of tariffs, most of the impact of tariffs on inflation to fade after 2 to 3 quarters, so in 2 to 3 quarters time. But there is a reasonable possibility that they could be more persistent.
So the original view, don't forget, was that September was hanging in the balance. So for one member there, it still seems to be the case. Now, the Fed speak continues on CNBC later today. Don't miss our exclusive interview with the Chicago Fed President Austin Goolsbee at 1:30 p.m. London time. But it does feel as though all the doves and some of them from the administration have been calling for that rate cut, but maybe the data is not going to support it.
No, that PPI report yesterday is certainly putting a bit of cold water on those hoping for a jumbo cut come September. We are going to take a quick break. We got lots coming up on the program. Antofagasta's core earnings narrowly beat expectations in the first half. We'll bring you Ridika's conversation with the CEO. Plus, shares of United Health rise after 13F filings reveal a key investor has taken a stake. We'll discuss. And we'll be joined by the CEO of Pandora as the jewelry maker reports second quarter results.
Fortum has posted an adjusted EBIT of 115 million euros in the second quarter. The Nordic energy firm said its first half earnings were affected by low generation volumes and market prices. Delighted to welcome back to the show Markus Raurarum, who is the CEO and president of Fortum. Markus, look, let me go through this from the beginning again for our viewers as well. You've been the boss since 2020. My copy here says leading the Finnish energy giant through one of the most dramatic turnarounds in European utility history. How's it going?
Yeah, thank you very much. It was quite a turbulent ride back in from 2020 until 2022. After that, we've sold our stake in Uniper. We wrote down our Russian business, and we have been focusing on the clean Nordic generation with our hydropower and nuclear assets. Now the company is in financially very good shape. So last year we posted earnings, comparable operating profit of 1.3 billion. And this spring, from that, we paid the highest dividend ever. Now we have net indebtedness of 0.9 times, so the leverage is low. We have 8 billion of equity and 7 billion of liquidity. And this enables us to support our customers in their growth in steel, aluminium, chemicals, hydrogen, data centers, battery factories. And to support that, we have been developing a pipeline of new renewables, pumped hydro, as well as potential to do also new nuclear and lifetime extensions. So we are well prepared to support the customers with great infrastructure and new supply of clean energy when needed.
So that's brilliant, and thank you very much indeed for that. That was a perfect explanation of where you've come from and where you are now as well. Okay, so talk about the current numbers to us now as well. Are there any particular headwinds which have dented the figures at all? You mentioned the divvy, so that's great news, but are you just happy across the board, or where needs the most work?
There are certainly positives and negatives in the results. So indeed, like you said, the comparable operating profit stood at 115 million for the quarter, down from last year. And the headwind was coming from the volumes. We had unplanned nuclear outages, hydro volumes now on a temporary basis, but they have been very low due to the hydrology overall. That's on the negative side. On the positive side, our optimization with our flexible hydropower assets and the storage, that has worked very well. So we get a very good optimization premium. And whereas the spot prices for the quarter have been at 26 euros on average, our achieved power price stood at 48 euros. So both the productivity of our assets and the optimization are giving us stability on our achieved prices as well as the earnings.
Markus, you note in your strategy update today that Fortum is developing a ready-to-build pipeline of onshore wind and solar projects to serve customer demand growth. We have been speaking to a number of companies in the wind energy space. It's been quite a tough time for a number of those companies. A lot of policy uncertainty, and a lot of those projects have been stalled. What makes you confident that now is still a good time to be getting into this space?
If you look at what is happening in the electrification and decarbonization to reach climate goals, to reach the promises that companies have been making, that will require huge electrification in the sectors I mentioned: steel, chemicals, aluminium, data centers, battery factories. And on the back of that, of course, we talk with these customers. The TSOs, the transmission system operators in the Nordics, they have just revised their forecast that by 2030, the Nordic electricity demand will increase from 400 terawatt hours to 550 terawatt hours. And in order to support that, we have created a pipeline with optionality. We just acquired about half a year ago a 2.6 gigawatt portfolio of wind and solar power under development, so not yet in construction. And just a couple of, or let's say a month ago, 4.4 gigawatts ABO Energy pipeline portfolio in Finland. So that's optionality. We're matching these projects with the anticipated customer demand, and we will not be investing before we have customer-backed PPAs to support this. So we have not put the projects in motion before there's actually customer backing. So this is really optionality.
Marcus, it's Karen jumping in. Your comments so far on renewables are fascinating, given you're also the president of Eurelectric. And as we talk about representing the industry around electricity, it's a key day as we count down to Trump and Putin meeting. Energy security in Europe seriously pressing at this point. How would you describe how Europe needs to think about its energy security and the pricing of that energy as it tries to remain competitive?
Indeed, so I recently took the chairmanship in Eurelectric. And now for the next 2-year term, our presidency priorities are that, number one, we support our customers in their electrification, really listen closely what they need. The second point is the resilience, energy security, both on a technical level, but even deeper, taking into account the geopolitical turbulence and the possible physical impacting of assets. We take that part very seriously, encourage companies, governments and authorities to work together, cooperate, practice, train for unusual situations. But then to your point about the renewables, it is clear that for new clean energy, that will come practically in the short term from renewables, wind and solar. They're intermittent, they're volatile, so they will need also flexibility to support it. We are developing pumped hydro, as I said, batteries and so on. But this will need customers, all of us consumers, also industries, commercial users, to be connected. So the third priority, to actually be able to work with this flexibility and maybe hundreds of thousands, if not millions of connected customers, we need to digitalize. We need to use data, we need to use AI to be able to optimize the system in its new form.
Marcus, we know that some of the motivation in Europe around renewables and plugging any gaps has been because of the geopolitics. If the geopolitics were to change and if there's a ceasefire in Ukraine, any breakthrough around the war in Ukraine, would that change what industry is doing?
We're focusing both in the Nordics as Fortum, as well in Europe, in increasing the domestic supplies of clean energy. So there's a huge shift happening from formerly lignite, a bit of that still in the total energy system, hard coal and gas into clean energy. So that means hydropower, nuclear power, renewables, storage and flexibility. And clearly customers, consumers have a preference for clean products. If I take Nordics as an example, clean energy is about half the price of what fossil-based energy would be. So the case for our customers, be it private or be it industrial, and for ourselves as producers, the case for clean is a very clear one.
Marcus, I want to ask about nuclear as well, because I know you're looking at feasibility studies in Sweden and Finland, partnership with EDF too, about trying to bring in some collaboration here with other rivals and potentially partners in the industry. I know that nuclear, at least stateside in terms of sentiment, has shifted enormously in the last 5 years. Pew Research had a study out recently saying now 60% of Americans support the construction of more nuclear power plants. How does it look in the Nordics? Do you think sentiment is behind you?
The Nordic sentiment, public sentiment backing nuclear is very strong, so the support is even higher. I'm really happy, of course, about that. So Finland and Sweden have been open for all production forms of clean power, be it hydropower, nuclear power, or renewables. And I'm really happy to see that Europe is also taking the stance that they're looking neutrally at all CO2-free power. I think that's important that as Europe, we keep all the tools in our own hands, so we don't close out options. That makes our possibility to achieve the energy transition, as it's going to happen, a bit easier. But that also requires that we do invest and take seriously the European supply chains. That comes to equipment, that comes to nuclear fuel, comes to the different steps of the process.
Marcus, I want to go back to your first answer where you talked about the increasing demands for energy across the board, and you snuck in there the words data centers. Hugely contentious all over the world, the amount of energy, the amount of resource, namely water as well for cooling, that these data centers are sucking out of the system as well. How contentious is it in terms of who you supply and who you don't, and actually the data centers taking voracious amounts of that energy?
Well, if I come back to what we are facing, for example, as an industry, so intermittent energy, connected customers, and massive optimization. So we need the data as an industry, and of course the the data centers, the AI, this is driven by customers, consumers, industries. So data centers are not being set up without a good reason. So it is customer driven. In the Nordics, we see that data centers are actually good customers. They have paying capability. They need stable power. The data center demand will support building stronger grids. It will help in generating new supply, both from renewables as well as flexibility and storage. And of course, there's an employment factor. And data centers, when you look at different industries, the investment intensity per energy used is actually higher in data centers than in most other sectors.